Hello and welcome back to the channel. Today, we're diving deep into a fascinating microcap biotech that's been flagged by our hard-to-borrow screener, LABT Biotherapeutics Inc., trading under the ticker LABT. This isn't just a generic overview, we're going to break down LABT's specific situation, its recent price action, and why it's currently showing such a high cost-to-borrow fee. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show LABT logo/chart. LABT, or Liquid Index Biotherapeutics Inc., operates in the critical healthcare and biotechnology sector. This is a clinical stage company focused on developing novel antimicrobial products from its bisphosphocin class, targeting a broad range of infections. Currently, LABT is a very small company with a market capitalization of just $3.08 million. Looking at its recent price action, LABT saw a positive day, up plus 6.93% today, and is up plus 2.86% over the last 5 days. However, the last 30 days have seen a significant decline of minus 40.82%. What is cost to borrow and why it matters? So, what does it mean for a stock like LABT to be hard to borrow? When you short sell a stock, you're borrowing shares, selling them, and hoping to buy them back at a low price. To borrow those shares, you pay a fee known as the cost to borrow, or CTB. This fee is typically annualized. When a stock is hard to borrow, it means there's a limited supply of shares available for shorting, and the demand to short those shares is high. This scarcity drives the CTB fee sky high, often well over 100% annually, as we're seeing with LABT. Why the stock is hard to borrow right now. Highlight CTB number. Our screener has flagged LABT with an astounding annualized cost to borrow fee of 738.3%. To put that in perspective, short sellers of LABT are paying almost double the stock's price per year just to hold their short position. We currently don't have information on CTB momentum or the exact number of shares available to borrow, but this incredibly high fee alone tells us that borrowable shares are scarce. With an estimated float of just 1.8 million shares, the supply is already relatively tight for a stock generating this kind of short interest. Our internal composite squeeze score for LABT currently stands at 41.5 out of 100. Squeeze mechanics explained. Show squeeze graphic. Why does a high cost to borrow matter? It creates pressure on short sellers. If the stock price starts to rise, two things happen: short sellers face unrealized losses, and they continue to accrue those massive daily CTB fees. This double whammy can force short sellers to close their positions. To close a short, they must buy shares back on the open market. If enough short sellers are forced to buy back simultaneously, it creates a buying frenzy, driving the price up further, which in turn can trigger more short covering. This is the essence of a short squeeze. A shrinking supply of borrowable shares, combined with high fees, makes this dynamic more potent. Dilution risk check. One crucial factor for any potential short squeeze is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can often depress the stock price and make a squeeze much harder to achieve, as new supply enters the market. For LABT, our check found no recent dilutive SEC filings like -1s, -3s, or 424 BS in the last 90 days. This is a positive sign for any short squeeze thesis, as it means the company hasn't recently flooded the market with new shares. Recent reverse split watch. Show reverse split explanation. It's important to note that LABT executed a 1-for-10 reverse stock split just 42 days ago, on June 22, 2026. A reverse split reduces the total number of outstanding shares and resets the share price higher proportionally. While reverse splits are often seen as a desperate move by struggling companies, historically, many microcap stocks tend to see renewed volatility or even a temporary price pop within about a month after a reverse split. This isn't a guarantee, but it's a pattern we've observed in some names, and LABT is still within that post-split window of potential elevated volatility. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with LABT? Keep an eye on the volume. Today's volume was 235,247 shares, which is significantly lower than its 30-day average volume of 3,009,491 shares. The relative volume today was just 0.1x its average. A true squeeze often requires a dramatic increase in buying volume. Also, monitor the cost to borrow fees and the availability of shares to borrow. If those numbers increase or decrease dramatically, it tells a story. Remember, a high cost to borrow does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction in their thesis and are willing to pay significant fees to remain short. LABT presents a fascinating setup with its extremely high cost to borrow fee and recent reverse split. As a microcap biotech, it naturally carries higher risk and volatility. Understanding these mechanics, including the potential for a squeeze, is key to navigating these unique opportunities. If you found this deep dive into LABT helpful, please smash that like button, subscribe for more unique stock breakdowns, and let us know in the comments what stocks you want us to cover next.